Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Tax Talk with AJ right here on ITV Gold. The show is brought to you by SAI CPA Services, a premier accounting firm with professional CPAs, experienced CPAs on hand to guide you on your personal taxes and also corporate taxes, or for that matter, if you want to start a business, need an advice or anything which has to do with the taxes and the business, SAI CPA Services can guide you. They can be reached at 908-380-6876 or visit their website, saicpaservices.com. With that note, I'd like to welcome Mr. AJ Kumar of SAI CPA Services with over 20 years of experience when it comes to accounting. Yes, professional accounting, corporate accounting, public accounting, that's everything built into himself, and that's why SAI CPA Services is one of the most remarkable CPA firms in the area. Multiple offices in the state of New Jersey, but they can be reached from anywhere in the US. AJ, welcome to the show. How are you?
Thank you, Sanjeev. I'm good. Thank you for the kind introduction.
Yes, very welcome. Now we are here in the middle of January.
Absolutely.
And tax season is just starting to heat up, huh?
It is.
There you go. Everyone, you must make sure that you're getting your W-2s and 1099s before the end of the month. So just keep an eye on it. And once you get that, immediately contact SAI CPA Services. Maybe there may be a reason that you want to save your taxes. And the other most important reason that everyone should know, that you must file your taxes right. It doesn't have to be refund only, but you must file it right, because IRS and the US government, they are really after the individuals who are not filing their taxes right. So you don't want to have a tax audit, and that's why you need to do your taxes right. Once again, you can reach out to SAI CPA Services for any advice, any consultation that you need. So AJ, as the tax season is heating up, obviously you're busy, your firm is busy in putting it all together, and there's going to be influx of individuals and phone calls and tax returns to do. We're going to talk about something very important in this week's episode, because this can affect many people in order to get the tax credit. But quickly, what I want you to touch base on the forms and the deadlines very quickly.
Absolutely, my pleasure. So in January, the first deadline that we see is 15th January. And that's the estimated tax payment deadline for the fourth quarter of 2023. Especially if you have a small business, you must make estimated tax payment if you expect to owe more than $1,000. And that deadline for Q4 2023 is January 15th, Sanjeev. By January 31st, the second deadline that we are talking about is the 1099 or W-2 filing deadline. If you have a small business, if you paid more than $600 for your business to any vendor, LLC, individual, throughout the year, in total, you have a 1099 filing obligation. It helps you legitimize the expenses. Just have them file the W-9, which needs the name, address, social security number, and then you can issue a 1099 to them. That's the second deadline. Then we'll have the next deadline on March 15th. That's the flow-through tax filing deadline. All the multi-member LLC, S corporation, they must file the taxes by March 15th and issue the K1 to the taxpayer. The final deadline, when it comes to the final major deadline, when it comes to the tax season, is April 15th, which is going to be the individual tax filing deadline and the large corporation, C corporation filing deadline.
Okay, very interesting. Thank you for that information. Viewers, I hope that you have made a note of it. Now, let's talk about really important subject in today's show. It's the vehicle credit. Well, now, what exactly is vehicle credit? What kind of vehicles qualify for the credit? It's not only one kind of vehicle, but there are various types of vehicles qualify for the credit, and it can be you using that credit, and AJ will give us more information. So let's start with EV.
Absolutely. Electric vehicle is what we are talking about, Sanjeev ji. So it's a new concept. It just started last year. Again, a lot of vehicles were not qualifying. Then the rules changed. Now a lot of vehicles do qualify as long as the final assembly is done in US, as long as the vehicle meets the minimum battery qualification, 7 kilowatt, have some chemical qualification. For a lot of these vehicles, you can just put the VIN number on the internet and see if your vehicle qualifies for the credit. The rule that you want to understand, there are certain income limitations that people have, the taxpayers have, and certain value of the vehicle limitations that you have. So at a high level, when we talk about how much income you can have while qualifying, while getting the electric vehicle credit, is maximum $300,000 for a married filing joint type of situation.
Okay.
So if it's a single filer, well, 300 divided by 2 make it 150. If it's head of household, is $225,000. If your income is more than your adjusted gross income is more than these numbers, married filing joint more than $300,000, then you do not get the credit. Then you do not qualify for the electric vehicle credit. Now, on one hand, we are talking about the income. The other hand, we are talking about how big, what value can you pay for electric vehicle purchase. So if you have an SUV, there are electric vehicles, they are typically more expensive. You can buy an EV SUV up to $80,000 and still qualify for the electric vehicle credit.
Nice.
If it's a regular car, not the SUV, then the limit that's prescribed is $55,000. So if your electric vehicle is more expensive than $80,000, then you do not qualify for electric vehicle credit.
Okay. So now this credit that you mentioned, that's on a federal form 1040.
Right.
I know we're based in state of New Jersey, that everyone knows. State of New Jersey also offers some incentives for the EV buyers, right?
Right.
My question to you is that do all states in the U.S. have that program that they
No.
offer incentives?
No, there are some states that are more savvy than others. New Jersey does, but not many states.
California do.
Yeah, California does.
Right.
So not many states have this credit. So you have to check with the local accountant or go on Google or check with an accountant to make sure you don't miss out on a credit that you should have received.
Okay. And this is for the vehicle must be purchased in the year of 2023, right?
Well, yes. In order for you to get the credit, the vehicle must be purchased because the tax return that you're filing now are for January 1st, 2023 till December 31st, 2023. So all the discussions that we are talking about is for the year 2023,
Okay.
even though we are filing in 2024, but the situation has already occurred in 2023.
All right. So you mentioned about the vehicles and what should be the income limits for the single taxpayer, joint, and the head of household. Now let's talk about what kind of vehicles qualify for these credits.
Absolutely. So most vehicles will qualify as long as they have the final assembly done in US, as long as their battery, they have certain battery power, minimum 7 kilowatt, and their battery has to have certain chemicals in there. They have prescribed something on the IRS website that these are the chemical mix. The best thing you can do is pick up the VIN number, put the VIN number on the internet to see if this VIN number qualifies for the electric vehicle credit. Just be careful, even though the website says it does qualify, but if you are paying more than the prescribed limit, let's say if you are paying more than $55,000 for a regular EV or more than $80,000 for an SUV electric vehicle, then you may not get the credit.
Okay, and the other thing is that it must be 7 kilowatt hours.
That's right. That's the battery
capacity, and then the weight of the vehicle should not exceed 14,000 pounds.
Yes. Well, we'll talk about there are other credits that you can qualify when it comes to the heavyweight vehicle, but for electric vehicle, the 14,000 pound or 7 ton is the limit that they have prescribed.
Okay. Any specific tax form to be filed, for the taxpayer to claim the credit?
Absolutely. I'm glad you reminded me. Form 8936 needs to be filed with your Form 1040 to qualify for electric vehicle credit, and it doesn't have to be a new vehicle. The good thing is now you can buy a used electric vehicle and still get the credit. For a used electric vehicle, the maximum credit that you can get is $4,000 or 30% of what you pay to buy the electric vehicle credit. But you cannot have this electric vehicle credit purchased from your family or friend. It has to be purchased through a dealership a qualified dealership, and the value of this electric vehicle, the used electrical vehicle, cannot be more than $25,000. So the way the formula works, you qualify for 30% or $4,000, whichever is lesser. Let's say if you buy an electric vehicle for $10,000, then your credit is going to be limited to $3,000, which is 30% of your purchase value.
Is there any limit on how old the vehicle is? When you say used vehicle, is it like 3 years, 5 years, or anything?
No, there is no such limit prescribed there, but it has to be bought from a qualified dealership,
Okay.
not from a
Sure.
friend or family,
Understood. Obviously, it's because
and it cannot be more than $25,000.
yeah. So there has to be a balance. Obviously, if you make purchase between the friends and families, obviously there are chances of inflating numbers
Right,
and so on
right,
and so
right.
forth. Right? You don't want to do that. All right. Let's move on. So that is the viewers. So that's the update on the EV. So if you purchased any EV vehicle in the year 2023, make sure that you qualify for the credit, make sure you do all the necessary homework that you need to do. And once again, that if you have any question, don't be hesitant to contact SAI CPA services. Please give them a call right away and they will guide you. Now let's move on to section 179. 179 section is the light vehicle versus heavy vehicle to get the credit.
Yeah, absolutely. So when it comes to the electric vehicle, section 179 is divided into 3 separate sections. And the section that we typically talk about is 6,000 gross vehicle weight rating section. So the way the section 179 is divided, the vehicle can be under 6,000 pound or 3 tons. The vehicle can be 6,000 to 14,000 pound. As we are talking about electric vehicle credit do not qualify if the weight is over 14,000 pound or 7 ton. But you can get then you can buy the vehicle if it's really over 14,000 pound under your business and get the 100% bonus deduction if it's over 14,000 pounds, 7 ton. So the way the section 179 is divided, so there are limits how much you can claim. So under 6,000 pound, they have this limit, $12,200 is what you can claim. Then there is a bonus depreciation of around $8,000. So in total, about 20,000 is what you can claim under section 179 for the first year in the year of purchase, if the vehicle weight is under less than 6,000 pound. If the vehicle weight is over 6,000 pound, and you can put the model number or the VIN number on internet, just type GVWR, gross vehicle weight rating, and put in the model number or the VIN number, and you will know exactly what's the curb weight is, what's the gross vehicle weight rating is. Based on that number, you can see if it's over 6,000 pound, you can claim up to 80% deduction in the year of purchase. So it used to be 100%, so please don't confuse. Up until 2022, it used to be 100%. In 2023, for all the vehicle that you purchased, you can depreciate up to 80% of the vehicle.
It's a lot of incentives, and IRS is really rolling out good tax credits. If you purchase certain kind of vehicle. So viewers, once again, make sure that you look into your own portfolio and see if you qualify for any one of that. It's time for us to take a short break, and when we return in the second half, we're going to talk about vehicle mileage, how mileage can be also used to get the tax credit and whatnot. But before that, as soon as we start the second segment, AJ will have some interesting fact for you in the Did You Know segment. That's coming up right after these messages.
Welcome back to Tax Talks. I'm AJ from SAI CPA Services. Did you know 262 million people filed taxes last year? Out of 262 million taxes, 83% or 213 million taxes were filed electronically. A lot of people, a lot of individual files the taxes electronically, a lot of businesses chooses to file taxes on paper. But in total, IRS received 262 million taxes.
That is very interesting fact. Thank you so very much for that information. And that number includes AJ filed his taxes, I filed my taxes,
Absolutely.
and if you, I hope that you have filed your taxes also. Let me ask you a question. This is
Please.
impromptu. If someone has not filed taxes in the last 1, 2, 3 years, right? What should they do? What kind of advice that you would give to that person?
Well, everybody's situation is different. A lot of people are not mandated to file taxes, meaning if your income is below $11,000, especially if it's a W-2 income, you are not required to file taxes. If your 1099 income is under $600, you don't have to file taxes. But if you do have to file taxes, if you are required to file taxes, you should file the taxes sooner than later. You wouldn't believe how many people come to us that they haven't filed the taxes for 3 years, 4 years, 5 years, and we get a lot of money refunded back to them only because they were due the money and they just never got around filing the taxes. Billions of dollars are not refunded to the taxpayers because they don't file the taxes. So filing the tax is an easy thing. You can always do it yourself. Go to IRS office, they will do it for free. Especially if you are in the lower income, or file an account, find an accountant. They will be happy to help. A lot of people who are actually due refund don't file the taxes.
Oh, good stuff to know, viewers. I don't know if you fall into any one of these categories, but if you do, please, take action ASAP. Now let's move on into our tax talk show. Right before the break, AJ gave us complete guidelines and information on the vehicle credit, EV vehicle credit, and light vehicle and heavy vehicle credit. So we continue that one. And before we go into the mileage situation, AJ wants to give some more information on the heavy vehicle, which should be over 14,000 pounds.
Well, so there are three categories: under 6,000 pound, between 6,000 to 14,000 pound, or over 7 ton, over 14,000 pound. So if the vehicle is over 14,000 pound, if you remember in the first segment, we said if it's an electric vehicle, you don't qualify for clean energy credit. But if it's a 14,000 pound, more than 14,000 pound type of vehicle, if you buy it under your business, you can claim 100% deduction as an expense. You don't have to use the yearly depreciation. For over 6,000 pound, under 14,000 pound, in that category you can claim up to 80% depreciation. The remaining 20% though, you don't lose it. You can always claim it in the future years. In the first year, in the year of purchase, you claim up to 80%. So you look at the situation. Take a quick example. It's quite funny the way it works. If you buy a vehicle worth $50,000, you go to the dealership, give them $5,000 of down payment to buy this vehicle for $50,000. You can claim 80% of 50,000. You can claim $40,000 deduction
for the 5,000 vehicle purchase
on your tax return, even though you only paid $5,000.
$5,000. That is amazing.
So if you're in 25% tax bracket, you save $10,000 by paying $5,000 to the dealership.
Nice.
So if you know the rules, if you can understand how it works, you can save a lot of money when it comes to tax.
Okay, very interesting, very good. All right, now let's talk about mileage. Of course, with the vehicle credit, mileage also comes into effect. Now there are several kinds of mileage. One is the business mileage, one is a charity mileage, right? And then if there is any other category for the mileage, AJ will definitely give us more info on that.
Absolutely. So the main type of mileage that we talk about is the business mileage. If you are driving your car for the business, if you are driving your car for delivery, if you have a side hustle, how much can you claim? So the current rate for 2024 is 67 cents, but we are doing 2023 taxes right now. In 2023, the tax was the mileage rate was 65.5 cents per mile. The way you do it, this is where I live, this is where I go for work, this is the distance, and that's how you compute how many miles you drive on an average. 65.5 cents per mile for your business type of credit. Please remember, if you have a W-2, if you do not have a registered business, you cannot claim mileage credit, mileage deduction on your Schedule A anymore. After last 5 years, after 2017, we have not been allowed to claim mileage deduction on Schedule A. But if you have Schedule C, if you have a 1099, if you have an LLC, S Corp, if you have a business, then you can claim 65.5 cents per mile for your business deduction. from 2014 is going to be 67 cents.
Okay, very interesting. So these are three categories: business mileage, then charity, and the medical and moving.
Absolutely, absolutely. I'm glad you reminded me. So for the charitable course, you have 14 cents per mile. If you go to a temple and do some service over there, if you have a non-for-profit company that you drive your vehicle for, you are allowed to claim 14 cents per mile uh, as a charitable contribution, as a donation for that purpose. Please remember, again, your time is not deductible. If you are spending 2 hours every Saturday, you can't really say my hourly rate is $25, so my charitable contribution is $50. Your time value of money is not a deductible expense. But if you are driving 20 miles one way, 40 miles every week, then in 50 weeks you have driven 2,000 miles. There you go. You have $2,800 of charitable contribution given to that society, given to that non-for-profit company. It has to be a registered non-for-profit company. You cannot really say, I dropped the Panditji to his home and this is my charitable contribution. This is not how it works. The service has to be provided for a registered non-for-profit company, and the mileage rate again is going to be 14 cents per mile.
Okay, that's interesting. This mileage deduction is always been a little tricky.
Yes,
And
absolutely.
you mentioned electrical vehicle credit and everything else, right? And I just came across a news story a little while ago. I want to mention it. One of the topmost, maybe number one rental company in the U.S., Hertz. Hertz is selling 20,000 of their own electric vehicles to buy gasoline vehicles.
Wow, that's amazing.
This is really interesting, I guess, maybe because, people still have to get used to it. I guess
Right,
maybe,
of course, of course. There's a
that is one
learning
of the
curve around
reasons.
it.
But, that I just wanted to bring that news. As much as government is encouraging people to buy electric vehicle, and people are also, buy electric vehicle, they want to buy it because obviously save energy and the clean air and whatnot. But this news, Hertz is selling 20,000 electric vehicles to buy gasoline vehicles. So even if you have a gasoline vehicle and if you don't plan to buy any EV vehicle anytime soon, not to worry. All right. But Hertz had made a big push in the recent years by going out and buying these thousands of vehicles. And now, actually they say electric vehicles have been hurting Hertz financial business.
Wow.
Yeah. It helps individuals, but for the rental company, executive has said, because despite costing less to maintain, they have higher damage repair cost and also higher depreciation.
It's not common. Not everybody can repair it.
Higher depreciation for EV vehicles?
Yeah, absolutely. Because the concept is changing so fast. So the depreciation means what's the life of this machinery? What's the life of this vehicle?
Correct.
So with gasoline vehicle, you have seen the gasoline vehicle for 10 years on the road. Electric vehicles, if you replace the battery, there is no cost to the car. You better replace the whole car. And the battery life is going to be 3 years, 4 years, 5 years, not what used to be 15, 20 years. You still see a lot of cars more than 10 years old.
Yeah, absolutely. Absolutely.
It's not going to be same for electric vehicles. So the depreciation will be very high. Anything new comes out,
yes,
they will have higher depreciation.
Absolutely. So I just wanted to bring the news and then, just update you that, how these EV vehicles and gasolines are. And a couple of weeks ago in our business talk show, we talked about one of the US companies, I believe GM, is laying off, GM or Ford laid off thousands of individuals from their EV vehicle plant.
Yes, absolutely. So as much as EV vehicle is the future for the auto industry, it's going to take some time before people get used to it. There is still a lot of gasoline vehicles. There are a lot of gas stations.
Yes,
all over the world.
Exactly. Well, gas stations are complaining about, business hurting because of these EV vehicles. So here we are. All right. So now we have covered the vehicles and the mileage, information in this week's episode. I just want to touch base upon this issue that is really looming up upon ourselves, and it's the federal funding, because the deadline is approaching very soon, and the Speaker of the House, Mike Johnson, has reached out to Democrats, and he got positive response to come to an agreement. But Republicans, meaning Mike Johnson's own party members, are not agreeing to extend this, federal deadline, and that is going to be very, very crucial because they are laying out so many conditions and whatnot. And the reason I'm bringing this because this is the election year. Should the party change, or let's say party does not change, they retain the White House, or the other party comes in, will there be, excuse me, all right, take that. Should the party change or not change, let's say current party retains the White House, AJ, do you think there will be changes in